Right, so welcoming everyone to the India market review for the week ending Friday, 10th Feb 2017. Budget is over, of course, we finished that last time. And if there's anything that's a surprise or newsworthy, in my opinion, is of course that Trump lost that legal battle for now in the Ninth Circuit Court in the US, 3-0 unanimous thing that the travel ban was unconstitutional. So that's interesting to see where that will go. And then IT stocks have given a big surprise today, especially yesterday, with some good sharp up moves, which in a sense was unexpected. So that and of course one more point is that the Dow Jones went back up above 20,000, and that was definitely something interesting. So looks like US markets are quite in a bullish zone, all right. This only a consolidation that happened in December, Jan, and looks like they are now again trending up. So it's quite interesting about. I don't know if there's a relief rally that's going on. One of the things that is out of the way is Trump spoke to Xi Jinping or whatever the Chinese premier's name is, and reiterated that US is aligned with the one China policy. So it looks like at least no squabbles there, and no, what shall we say, um, antagonistic voices there. Some level of sanity or some level of continuity is there. Right? Something had cooked up there, then maybe the market would have reacted somewhere else or in some other fashion. So US markets clearly trending up further. Then we have the S&P 500, which would also basically be going into its life high territory. So that's another, the broader stocks also basically doing very, very well. And then you've got coming to Europe, Germany. So Germany, we had mentioned, the issues in Europe in terms of the elections, the possibility of this right-wing nationalistic parties coming to power, and something back on the radar now on the news is the Brexit. Greece has to make a payment of $1.5 billion as part of a repayment today, and looks like they will do that. But there is now some little bit of renewed concern about whether Europe will have to write off a substantial part of the loans that have been given to Greece. The IMF spokesperson or chairman came and said that unless that happens, there is no way Greece is getting out of its mess. So that's something to be seen, and that's going to happen over many, many weeks and months. So just to note that, just because something is not being mentioned in the news does not mean the problem does not exist. So the Greece problem definitely exists, and now they talk about, well, any of Brexit has happened. If Brexit happens, then what's the scene? So it'll be interesting to see what happens on that front. So looking at the DAX, at least some sort of a, I wouldn't say relief rally, but it's definitely come to an area of support, and it's bouncing from there. Whether it can sustain and go up all the way back to 11,800, that I think is to be seen. But like I said last week, and I reiterate that I think the European elections are something to keep a close eye on. Then let's see. Let's do CAC first. And on the CAC, similar bounce. So it was a downtrend, as you can see, for about 3 weeks, and then we have this up move, just replicating DAX or any other European indices. FTSE was actually doing better, had come back to its old life high, and then bounced from there and was already going up. DAX and DAX and CAC did that only in the last 2 days, but FTSE has been doing that for almost 2 weeks, 1.5 weeks at least. So FTSE looking steadier. So even though the Brexit sort of getting clearer, and looks like the US or the UK markets tending to be very resilient. This is a trend line I would like to watch for UK in the coming weeks and months, whether they actually hold on to that, and if they do break that, that could be the first sign of important top having been put in place. And finally, coming to Nikkei. So Nikkei, well, nothing really happening on Nikkei. It's going sideways. It's almost become a sort of triangle. So let it decide what it wants to do. And oh yeah, so the big thing about it's not showing on this chart because it's not been updated with today's data. Nikkei was up 2.5% sometime during the midday India time. Relief rally based on Abe's visit to US, and it'll be interesting to see what happens there. Talks going on. There's a golf retreat between Abe and Trump, I think today or tomorrow, at his Florida some guest house or resort or something like that, whatever it is. So this might be, Nikkei might be on the verge of a breakout. If it goes up, then this Nikkei hit 20,000. That is something that is distinctly possible. So coming to India with that, what you can see is that the Nifty basically really not doing much. It's more or less been flat over the last 1 week. So closed in the green today, of course, a little bit, 18, 19 points, but wondering whether it is now getting a little tired. There is one thing to keep a watch on, is a potential MACD crossover. It's not yet happened, but question is it in the works, right? And these MACD crossovers can take a really long time to happen. The other thing also to keep in mind is that seem to have hit some sort of overbought territory, and we'll have to see about how that plays out. I mean, it's not overbought in terms of, so it's in terms of what we teach in the indicators course, mega overbought, if you remember, right? It's not yet there, and the thing is that it is a mega overbought after a mega oversold at this point in end of November. So quite possible that it could just sort of pause here for some time. I don't think this uptrend is necessarily over. It'll still be wait and watch, but it seems to definitely be hitting a pause. Perhaps till the state election results are out, so that will be 10th or 11th of March, I think, if I remember correctly. So that will be the trend line to watch for now. You've got something like this triple top forming, not a triple top, but sort of sideways consolidation forming there. And remember, this happened about 3-4 weeks back and just broke out. So if there's anything about UP elections, Punjab elections, etc., which could be very, very much in favor of especially the BJP, the NDA, then probably could be seeing new life highs ahead. Sorry. On the other hand, do remember that there have been more and more analysts coming out with some earnings downgrades, and the budget also talked about a slightly lower GDP growth rate, though the RBI said that. Sorry, the RBI said that, and though the RBI did say that they expect a sharp recovery in growth in FY 17-18. And if that's the case, it's quite possible that the markets would not correct from here and just at best maybe go sideways, and that the signs of growth start to increase. One thing that other thing that needs to be kept in mind is the RBI stance has gone from, I'm sure some of us watched the news, from accommodative to neutral. So looks like further rate cuts are unlikely. There are concerns about inflation, and there's also concerns about how this H1B and demonetization, and about US growth recovery taking money back, and that we'll have to sort of defend our currency and our economy with maybe higher interest rates for some time. So that was one clear shift. So lower interest rates, lower lending rates, perhaps not immediately on the card. And most of the commentators and the pundits did not expect that at all. They were expecting, if not a rate cut now, will probably be one later. But there's been a slight hardening of that stance by the RBI, and it'll be interesting to watch. So there was one person, I don't remember who said that the interest rate cutting cycle is now over, and we may not really see any more cuts going forward. So, if that is the case, if that is the interest rates are not going lower, then there's definitely that issue to also keep in mind, that lower interest rates are not going to help. Since we're not having lower interest rates, that's one positive stimulus which is not there in the economy going forward. Okay, so so the view on the Nifty right now, of course, is that there is strong resistance at 8820 thereabouts. There could be a pause or a slight sideways movement. The move to 9,000 still cannot be ruled out, but 4 days of sideways moves is definitely something that one wants to just keep a watch on. So though no immediate downside expected on the Nifty, okay, let me review this again. So global markets and European markets, US markets looking bullish. So that should be a sort of sentimental booster to us here in India. But the sideways move and slight questions on the economy could limit the headroom. Not expecting a big down move right now, but yes, expecting a pause, slight positive bias, but definitely looking at a pause. And one thing to keep in mind is this lowering of volumes in the last 3-4 days. That enthusiastic buying is tapering off. Maybe some profit booking will happen. And if the MACD does do a negative crossover, then maybe another 50-100 points up looks like, or 9,000 max, but doesn't look like this is going to make a new life high, at least for now, in the immediate future. So, well, with that, let's come to the individual sector indices. Looking at so Nifty Junior. So one place that has been outperforming is definitely the mid-cap space, and perhaps we need to do a review of the mid-cap stocks very quickly. Let's see how this looks, and maybe we look at a few today. So that's a place where new mid-cap high has been made. Okay, right. And if I had to sort of bet my money, I'd probably move it from large cap and put it in mid caps for now. It's still showing, definitely showing outperformance and a lot more strength than the Nifty is. You can see the CNX 500, also called the Nifty mid cap index, that's slightly made a new life high, but not a closing high. And we'll see how that really pans out. Okay. So basically both the broad market and the narrow market doing well, though the mid cap space is outperforming the large cap space. So that's very clear. Coming to the sector indices, Bank Nifty. So intraday during RBI policy, there was a little bit of volatility, not a lot. In Bank Nifty, well, curiously, some of the bank stocks have actually made life highs. Case in point being Indices Bank. Have to ask the question whether what we are seeing here is a possible flag information on the Bank Nifty, and if that's the case, then at least from 19,550 to say 20,500. So that's almost 1,000 points. Could the Bank Nifty go up by another 1,000 points to say 20,600 first, then 21,000 is something that is looking quite possible. Looking at the weekly chart now on the Bank Nifty, you can see that this week has been the first of almost 1, 2, 3, 4, 5, 6, almost 1.5, 2 months of a pause. Of course, there was a pause earlier, about 3 weeks back. Unlike the top here on the left side, where you see long upper shadows, here we are not really seeing that in weekly Maru Bozu type candles. Looks like in the sort of longer term as in 1 to 2 months ahead, the Bank Nifty looks like mostly headed up rather than any correction. So in spite of nothing being really given by the RBI, there is clear interest in the banks stocks, and one should not look at shorting them. As a matter of fact, banks are probably good long opportunities. Okay. And coming to, let's do the autos next. Interesting. So a lot of launches happening again. Looks like there's no letting down on that, and autos are making up. Triangle, or one might even call it a pennant. So breakout. So if you take that as a half mast, about say 21,200 to 22,500. That's about 1,200 points. We're talking about almost 5 to 7% move. So it looks like 23,200 on the auto stocks is probably a very, very likely possibility. Right? Also notice that this yellow line, which we had used as a support earlier, has been crossed and is probably providing support again. So yep, the auto is looking good, possibly making on their way to making a new life high. All right. Okay. Looking at capital goods. So capital goods, one of the laggards in terms of the overall behavior of this entire sector for definitely a couple of years, or more than that, almost 6 years, seem to be, maybe taking off now. This is the weekly chart, and weekly nice strong green Marubozu. So is the market looking at recovery in the capital goods space, and is this perhaps a place to buy? Cross the 200-day moving and the long-term moving averages quite nicely. If anything, it's now at this close to this resistance zone. Right, there you can see bottoms here, top there, bottom here, bottom here, top there, if you're following my cursor. So this is a multi-year 2014-2015 resistance zone that it has come to, and I think if it breaks that, then 17,000 and what? Maybe a new life? Not now. It's quite far from its life. Could come to 17, and then it could come to 19,000 also. So this is capital goods. Capital goods looking potentially good once it breaks that resistance. FMCG, so there was this sale of ITC by the government of India, and that just took the stock up. I'm not sure why, but you have a clear shooting star. So here's something to keep a track on. Weekly candle also big shooting star. Where oh my, just notice that on the FMCG we don't have a red candle for 1, 2, 3, 4, 5, 6, 7, almost 2 months. And whether this is a correction that's going to happen for the next few weeks on the FMCG space and perhaps come back to 8,006, 8,400, and we may have to review after that. So probably a little unique to FMCG right now. We'll just wait and watch and see how it breaks out of. And this could strongly have been influenced by ITC, since ITC is a big, huge heavyweight in the FMCG index. Looking at healthcare, so healthcare this week been pretty bad. See how it really nicely went earlier this week on Tuesday, I think. Yeah, Tuesday to that high, almost just a few paisa or a rupee or two shy of the 200-day exponential moving average, and then move back down. So on the other hand, really not much no significant weakness in indicators. We had mentioned that pharma might be bottoming out, and may actually be a place to perhaps look at entering long. Keep this in mind that we may actually be witnessing a head and shoulder neckline of sorts. There you have it. All right, so left shoulder, head, and in a sense that head, maybe right shoulder complex head, or maybe the right shoulder forming. And if it can go back up and break 15,600, then FMCG could be a place. A lot of, I wouldn't say a lot, sorry, some amount of good news coming out of the pack, as in looks like some companies have a lot of ANDA filings, FDA filings, etc., which are in the pipeline. I'm not sure which company that announced that they have 25 new launches this year. So in terms of potential new markets, very much happening. Doesn't seem to have lost its oomph. I think, but the big challenge is, of course, how much US opens up or closes on India. I think that's a two-way sword. Right. So IT really didn't perform. I mean, the overall index actually sort of didn't perform as well as we expected it to. But at lower levels, by the looks of it, in the broader picture of a few weeks, or rather many weeks to about 1 to 2 months, doesn't look like a short, maybe a good place to buy at low levels. Then IT, so this is definitely the sort of surprise. So it looks like definitely, in a sense, got it wrong. This time was saying that IT should probably be a bearish view last week, and lo and behold, this week it has really shot up. So first, we were talking about whether this rise last week was just a sort of dead cat bounce and it would go down. But IT has done some big up moves yesterday and today. If you were short on any IT stock, then one should have gotten out yesterday. And today was a continuation of that up move. Looks like the 10,200 mark would be broken, and then perhaps we are on the way back up. However, I would not be so, what do I say? I'm not in any hurry to change my view. Not so much because I gave a view. Of course, there's that psychological bias which is there. No one likes to be wrong, but I just want to reiterate that this, US H1B issue is not over, and till that is clarified one way or the other, it will be difficult to say exactly what next. Okay, what's also interesting on the weekly chart of IT is bounce may be, well, a bounce. On the daily chart, it's definitely looking strong. It looks like it might break out the way the candles are. But you have the 200-day moving average at about 10,270. And on the weekly chart, what you're very clearly seeing is that it's come to this 3-year or 2.5-year resistance zone. It'll be really interesting to watch what happens after this. If it is able to break through that resistance zone, that lower yellow line there at around 10,100, and then effectively go about another 100, 200 points, then looks like level 5, etc., 11,500, etc., could be coming on IT in a much faster time than ever expected. But I would still watch out for event risks coming out of the US. And there's also I think the minor squabble, or looks like a minor issue about the founders of Infi and the board of Infi and Sika's, the CEO of Infi's pay. And how there could be an issue there amongst some other issues. Some people, some commentators are saying it's a minor issue, it's a non-issue. Clearly, it's not going away very quickly. But anyhow, that's just on Infi. There's a lot of other good IT companies there that you can put your money on in case Infi is not for you. But just keep this in mind about this potential resistances on the IT thing just a little bit above. Then we have the metal index. So the metal index has just been rearing. So it's the index itself has almost doubled from the time we said it should be bought in March of this 2016. Keeps pausing once in a way and then goes up further. That was the weekly chart you were seeing earlier. Now you're looking at the daily chart, and what's very clear is that you have a crossover now, a negative crossover on MACD, and there seems to be some profit booking, etc., that may be happening. Right. So this is a thing I would like to keep in track. Is this a potential rounding top which is happening? If it breaks this level, then we definitely have. Right. If it breaks that level, then we probably have a top put in place on the BSE Metal Index, and there are other companies that would perhaps take over the leadership of the market. The metal has done wonderfully well for many months now, and there's not been a single time period in the last um, almost 1 year where you've had any meaningful price secondary correction. You had one here, right? That was May, June 2016, and after that you had a sideways correction, but no downward price correction. So just wondering, thinking my thoughts out loud, and on a daily chart, wondering whether this is a rounding top. The only way to definitively know is if it breaks 11,500 mark. So till then, metals are a wait and watch. So if you had many money in metals, one should put some tight stop losses and watch the market purely for about, I think, the next 1 week max. Hopefully by the end of next week you'll know whether it's broken 11,200, 11,300, which would be there in that vicinity, or it's taken support about 11.5 and then it has gone up. So be prepared to exit metals or go short once that rounding top is over, and then we'll give you reality. So that's been one place which has been really looking good ever since the budget got over. It just kept going up and up and up. Looks like that capital gains tax on reality holding period down from 3 to 2 years has done some help to the sentiments, at least. And looks like this is really not in any mood to be tired or give up. Reality should definitely be a buy on dips. No need to buy something on Monday, Tuesday, but definitely a buy on dips is what reality is looking like. So is infra, CNX infra. As a matter of fact, looks like that's broken a resistance level of about 1.5 years, and that definitely is a good sign. So reality, infra, capital goods are three places where strength has clearly appeared. Reality much earlier, capital goods now, and infra also sometime earlier. Uh, Putting all two together, that is basically, in a sense, not the entire, but a good chunk of the core economy, investment-led infrastructure building, etc. And mood question is, well, at least the market seem to think there is that sort of a recovery and that sort of potential going on. So one should probably just look at going long on the stock. So surprise, surprise. I think except for FMCG, was it FMCG? Yes. So FMCG, we were a little bit concerned about the weekly shooting star, but that might just be only on ITC and not any of the other things. We'll look at that in depth in part 2. Everything else is clearly strong. Metals, bit of a concern, right? So FMCG, metals, and there's nothing else. Everything else showing strength. CNX Energy actually has gone to its life high, but then that doesn't really say much since this is only since 2010. 2008 high was much higher. BSE Power gives a better picture. So BSE Power, you can see that has broken the 2220 level, this resistance zone, and once it's done that, it will go to 2350 and into a high level. I must confess, a little surprised by the turn of events. Looks like the market is, I would say, running mostly on sentiments and hope. I don't believe the fundamentals really support this, and the markets are definitely on the expensive side. So it's just wait and watch and see how it goes from here. Like we said, global markets are supportive, European markets are supportive. The sentiments in India seem to be pretty good. One thing that happened also, the rupee recovery. The rupee strengthened nicely, and looks like whatever negativity is there is being washed out. The other big trigger, I think, will now just be the UP elections and the other state elections, and depends on how the market goes from there. Right, done. So basically, every index is a long or a buy on dips, which brings us to a counterpoint, which is when things are very strong, or rather almost all the indices are showing strength, then are we in some sort of overheated, very over-optimistic situation. There's a nice graph, I want to post it on the BIC Yahoo groups about the VIX, the volatility index in the US being at very, very low levels. However, there's another chart, seen it for the first time, where there was a different thing about pricing for black swan events, or tail risk as it is called, if you know your distribution statistics, and that has significantly gone up. So it's a very interesting and unusual setup where the VIX is at a very low level, while tail risk protection products or extreme risk protection products are quite expensive. I think that sort of reflects the market's, what do I say, understanding of the political situation with Trump and the rest of the world, that with a tweet, with one statement, he could really upset any balance of anything, just at a blink, and we just have to see how that goes. So there's event risk, global event risks, and local event risks are much higher, though the VIX itself is, India VIX. Where is that? Oh, sorry. Not be here. We had it 1 second. Okay, got some issue with the India VIX data. I'll have to check it later. All right, so overall the view is bullish to neutral to bullish on the overall index, but many of the sectors are showing good amount of strength. So what we'll do in part 2 of today's IMR is definitely look at some of the surprises. One is the IT space, and I think also look at the banks, because like we said, we're talking about whether there's a potential flag in the banks. Where is that? Right, so that's the flag. And in this time, maybe look at some of the mid-cap spaces which are outperforming, right? Okay, so closing the IMR part 1 of today here, and then we'll do IT and mid-caps and banks in part 2. Right? So those who are online, just hang on for about a minute. I'll send you the other link. Others, hope you watch the recording and do some in the feedback once you've done that. Right. Thank you and have a great weekend.